5-minute scalping strategy. Guys, this is absolutely insane. It is recession proof. I'm about to share with you guys a 5-minute scalping strategy that is so consistent it would absolutely blow your mind. The reason I've been talking about scalping so much is because I believe it's not just about being stuck to one type of trading. If you're stuck to one type of trading, you're going to be missing opportunities elsewhere. I've got my annotations on, and as you guys know, I always like to start off with it's a new week, because when it's a new week, everything's fresh, everything's blessed. We've got fresh eyes on the charts. If I just zoom out just a little bit, you can see price has been dropping. Money creates a high, then it factors in a low for the day. And so what am I seeing straight off the back? I'm seeing that price is still making lower lows and lower highs. So this is our high and this is our low. And then what does price do? Price retraces again, and then it drops down beneath this low over here. And that's the key thing here. The moment price drops beneath this low, it means that price is still moving lower. I've said this before, whenever price begins to retrace or pull back, the only reason it's doing that is to generate liquidity beneath these lows to then run it later. So in other words, they are accumulating orders beneath this low and every other low that they're going to give you, and then they're going to run it later. Just imagine what people were thinking when price broke above this area here. They were looking at some kind of break and retest entry to take it to the upside. They got multiple rejections off this level. They thought that this level was going to hold, and then look what happened. Price then broke beneath that low, and just remember what I said, the only reason they retrace is to generate liquidity to run it later. When price started consolidating here, they were generating liquidity, and so they were going to run it later. I'm gonna go ahead and delete this real quick now. And then this is where it gets really important now. You have to understand your discounts and your premiums now. When price drops beneath this low, anything beneath this low now is at a discount. And ideally, you want to see price sell off from a premium price. So you want to wait for price to get into a premium. How you know price is at a premium is the easiest way, just to bring out the Fibonacci tool. You can just eyeball it, but I'd rather be accurate than just guessing. So if you bring out your Fibonacci tool, take it from this very high to this very low. This is going to help you get the most accurate levels. And don't forget, we're not using this Fibonacci tool for no entry. I know this is what we were taught back in the day. You can enter off of the 61, off of the 50 level, and off of these different levels. There's nothing magical about those levels. Just know that whenever price trades back above 50% of this expansion lower, price is at a premium. And the deeper it pushes up higher into this range here, from the high to this low, it just becomes more premium or heavily premium. What you want to do then is you want to look for a point of interest that's going to be within a premium price. And just a little side note, look at these relative equal lows. These are going to be really good for targets. So what did I identify? I identified that within a premium price, there was an imbalance right here that price could respond off to then take price lower. So this is our imbalance from this kind of 6-week high to that one's low. They don't touch each other once again. So there's inefficiencies right here. Only sell side was offered to the market, and so they have to come up to this level to deliver buy side to the market, and then we'll look to be getting bearish. This is the important thing. Don't be looking at point of interest that's beneath 50% of this expansion lower. So anything beneath here, because most likely it is not going to hold. When price gets up into this area, this is where we're going to be looking to get active. Sometimes you might miss this opportunity, but it's no big deal. There's going to be opportunities to get in along the way, and that's what I'm about to show you guys. So you can see right now, price trades up into this inefficiency. It offers that buy side to the market, and then price starts to push lower. And if you're not in from the imbalance already, this would have obviously been one place you could be looking to sell from. But if you're not in from this imbalance here, this is where you have to be patient and wait for an opportunity to come. There's always going to be another opportunity to get into the markets. The odd time they might not come back for any kind of retracements and let you get into the market. So let's hit play, and I'm going to show you guys how I was able to catch an entry after missing this imbalance entry. I'm going to delete this line because you guys know where we are. We're already in a premium and price is pushing lower. At this point here, it's not about chasing a trade. I know some of you guys are out there, you're going to chase the trade. You're probably going to end up with some dead stop loss, and it's just not going to be favorable for you. Don't chase the trade. I know some of you guys would have felt FOMO at this time. You would have thought you've missed the move. The imbalance has already been filled. Price has moved 22 points. You probably missed the move already. And some of you, knowing that you want to catch this move, you would have taken a short position at any time when price is pushing lower, put a stop loss above the high over here, and then you would have targeted this level down here, and you would have caught just less than a 1-to-1. So that would have been a dead trade. But then this is how I caught the move. So when price was pushing lower, price left an imbalance here. It came up to fill in that imbalance. This could have been a potential entry to then take price lower. This was not the one I caught, but I'm just showing you guys you could have used this imbalance for an entry. Price is pushing lower again. It's left this inefficiency here now. I'm going to go ahead and mark that out for you guys right here. This is my inefficiency. I expect price to trade into this imbalance and then drop to my level, which is these relative equal lows. And so I'm going to go ahead and enter a sell position from when price trades into this imbalance. And then the safest place to put your stop loss will be above this high over here. And then you can go ahead and target these lows. So this right now is a much better trade than the person who jumped in FOMO in, you know, they would have caught less than a 1-to-1. This one, at least you're going to catch like a 1-to-4 trade. I'm going to patiently wait now because price has to come to me. I'm not just going to be jumping in when price is moving. I want price to come to me. Price gets up into this imbalance over here. This is all sell side being delivered. Price trades up into this area, offers that buy side to the market. This is where I get in for my trade. I'm in now for my trade and I'm looking to take it to the downside. People go for 1-to-1s when they're scalping, maybe a 1-to-2 when they're scalping, but this trade here offered a 1-to-4 trade. Not only that, I'm going to play it one candlestick at a time. Price pushes lower again. What does it do? It leaves another imbalance over here. Check it out. Imbalance from that high to this high. So this candlestick's wick and that one, they don't trade into each other. So this is another scalping opportunity that you can take when price trades up into the imbalance. You can put your stop loss above this high. That's an 8.4 point stop. You're going to target these lows once again. So now this is a 1-to-2 trade. Your normal typical scalp, but it's a lot more high probability because you're staying aligned with the trend. You've waited for price to get up into a discount and now price is trading in your direction. Not only that, look at this, price is traded beneath this low over here. So in my eyes, this is an institutional candle to the upside that runs out the liquidity above all of these highs. There's liquidity in this area over here, well, technically all around this area over here. Look how many times price came in and touched this retail resistance zone. So whenever price traded into that retail resistance zone, these folks would have been the early sellers, but they were knocked out the trade and then price got going. Let's go ahead and hit play real quick. There we go, one candlestick at a time. You can see here, look at that. Price pushing away. Don't panic. If they don't come to your entry, they don't come to your entry. Don't be trying to force things. If it's not coming to you, it's not coming to you. Hit play again. Straight up into the imbalance. You could have been active from the very lowest point of the imbalance. You could have done 50%. Or if you're cheeky and you want to go for the full position, you can go for that too. However, look at that. Sometimes they miss it. Sometimes they get it. And so this is why I always target 50% and not necessarily the full fill all the time. Price trades into this area over here. We go ahead and hit play again. And then price goes straight for that money. Runs that money. And it's at this point where you must take partials at least. If you're not looking to take partials, you better move your stop loss. But I always recommend taking partials at this point. The moment price runs into that liquidity or this liquidity pool, you can see relative equal lows there. This is where you're taking your money because there's always a potential for price to turn around after it's run liquidity. And don't forget, you've now made a new low. So now you don't want to be holding onto a full position. You need to be taking some kind of partials. So before I go ahead and show you guys the screenshots and executions, let's talk about how long this took. So for the very first trade, so hitting TP, that took 30 minutes. So that was a beautiful 30-minute scalp using a 5-minute time frame. For the second trade, I didn't catch it on TradingView, but I did catch it on MT4. Yeah, so the second opportunity from when we entered to where we hit TP, so that took 15 minutes. Another beautiful 50-minute scalp using the 5-minute time frame. So now I'm going to show you guys my executions. All right, guys, so here's my executions on the trade. Just before I even talk about the executions, this is the importance of taking partials when price runs liquidity. I done told you guys, when price runs liquidity, there's a high potential it could turn around. And so this is what it did. But anyway, guys, let's zoom in a little bit. So this is where I entered the very first trade over here. And I took it right down to these lows. This is where I took my partial profits. So after taking off 80% of the trade, I then moved my stop loss above this high. So this is where the remainder of the position got taken out above this high. So here are the screenshots I posted on Instagram too, so you guys can see it for yourself. If you want to know more about scalping, go ahead and check out this playlist.